Hello traders, welcome back to the Forex Gig, where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we're going to be talking about the EMA crossover strategy, a powerful technique that professional traders use to identify trends and potential entry points in the market. This method combines the speed and the responsiveness of the exponential moving average to provide clear signals for both novice and experienced traders alike. So by the end of this video, you would get a better understanding on how to implement this strategy, how to spot them on your own, and how to have the ability to spot profitable trading opportunities. So you have to stay tuned as we break down the EMA crossover strategy step by step and equip you with the knowledge to enhance your trading arsenal. So the EMA crossover trading strategy is now what we understand as the EMA crossovers. Let us dive into a comprehensive trading strategy that utilizes the powerful tool. This will be a step-by-step approach. We will help you to identify potential trade setups and manage your position effectively. The first step is to choose your EMAs. For this strategy, we will be making use of the indicator using the 9-period EMA, the length of the 9 period for our fast moving average, and we would make use of the 21-period EMA as our slow moving average. These settings provide a good balance between the responsiveness and the reliability. So after choosing your EMA, you set up your chart. You apply the EMA, the 9 EMA and the 21 EMA to your preferred time frame. For this strategy, we recommend using the 1-hour chart. For your intraday trades, or you can make use of your 4-hour chart for your swing trades. Ensure your charting platform distinguish between the two EMA. As you can see, I'm making use of the blue line for the 9-period exponential moving average. I'm making use of this yellow line for my 21-period exponential moving average. This is preferably used with different colors. So you make sure you set your EMA with different colors. If you don't know how to set it, you simply go to your EMA settings, go to the style, and make sure your based EMA, the first EMA up here would be a different color from the EMA based MA. Should be a separate color. The two has to be different colors. The third step is to identify the trend. The relationship between the 9 EMA and the 21 EMA helps us determine the overall trend. Now for a bullish trend, the 9 EMA has to cross over the 21 EMA. As we can see in this area, the 9 EMA, which is this blue line, is above the yellow line, which is the 21 EMA. This is for a bullish scenario, a bullish trend. Now for your bearish trend, you have to see your 9 EMA crosses below the 21 EMA, and as we can see in this area, the blue line crossed below the yellow line, signifying bearish trend. When your 9-period moving average cross below your 21 moving average. Once you have identified the trend, you wait for price to pull back. In a bullish trade, you wait for price to pull back to the 21 EMA, and when price pulls back to the EMA, it helps you not to enter the trade too late in this move. So you wait for price to first pull back to the 21 EMA. This is where you'll be looking to get your entries from. So when you see a crossover at this area, for a bullish trade, when the 9 EMA crosses over the 21 EMA and price pulls back to the 21 EMA, which is the long-term EMA, the yellow line. Once price pull back there, this is where you'll be looking for your entries. You can also wait for a candlestick pattern, like we saw a hammer candlestick pattern at this area. This further strengthens our entry. This is where you would want to enter. Remember that you must see a crossover for a bullish entry. You must see the 9 EMA crossing above the 21 EMA. Then for a sell trade, when you are looking to enter a sell trade, when you see the 9 EMA crossing below the 21 EMA, you wait for price to pull back to the 21 EMA at this area before you decide to take your sell trade at that area. When price decides to pull back is where you would want to enter your bearish entry. Now, to reduce false signals, you have to wait for a confirmation from price action. Ideally, you want to see a strong candle close beyond the 21 EMA. So when price pull back to the 21 EMA, you wait for price to close beyond the EMA or above the EMA before you decide to enter your trade. So once you have placed the trade, after a bullish crossover, you place your stop loss just below the swing low. Your stop loss will be placed just below the swing low. Then in a sell trade, you place your stop loss just above the swing high. You just place it just above the swing high. Then for your take profits, you can use two executive methods to take profits. The first method to take profit is using a fixed risk to reward of 1:2. You use a fixed risk to reward of 1:2, and this will be the first way to take profit. And you can also use a 1:3 or 1:4 as the case may be. The second method you can use to take your profit is using a trailing stop. You have to move your stop loss to break even once the trade moves in your favor, and then you continue to trail your stop behind the 21 EMA as trend progress in your direction. This is how we trail the stops. Now let's look for another example to better understand what price action is trying to tell us in this area. Now when we see a crossover at this area, we saw a crossover, we waited for price to come back and retest the 21 EMA, and we need to see price leave the EMA in a bullish manner since we are looking for a buy trade. So after the bullish crossover, don't forget, before you take a bullish trade, price has to consistently be trading above the EMA, and price has to break above the EMA after the crossover. After the 9 EMA crosses over the 21 EMA, you have to see price come back to retest the 21 EMA, which is this yellow line, and you enter once price has left the 21 EMA in the bullish direction. You enter that trade at the cancel close, put your stop loss just below the swing low, and you aim for your 1:2 or 1:3 as the case may be. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe, and turn on the notification bell so that you will never miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.